$81,000. That's the gap between two business owners I could put in front of you right now. They have the same business, both landscaping contractors, both did about $1.5 million last year, same city. One of them paid the IRS 81 grand more than the other one did. And here's what actually gets me. I see this exact gap over and over again. Same size companies, same handful of spots, and a different owner every single time sitting in front of me. Nobody stole it from them. Nobody cheated them. And it didn't even really disappear. It walked out of the businesses through 6 different doors. And I bet money that you have the same 6 doors standing open right now. So let me do the thing I wish somebody would have done for these guys years ago. Let me show you exactly where 81,000 went. And I'm going to be keeping score today, right here on the screen with you, so you can watch it add up in real time. Real quick, so you know why to trust me on this one. I have been inside of thousands of these returns, thousands at least. And after enough of them, you stop reading the numbers and you start seeing the patterns, how the same few decisions in the same few spots almost every single time. And here's kind of what's funny. The business might change over the years. The industries do change over returns. The personalities and people behind the businesses do. The same 6 patterns don't change though. That's when I realized I wasn't studying tax returns anymore, and I was studying the business behavior behind it. Most of the time, I know who overpaid before I finish the return. And that's the actual job. It wasn't some new tax trivia I was playing. And let's face it, anybody can Google a deduction and see if it is a deduction. But what they can't see through that is a pattern. It's the things that you can't see behind the return because you've only ever been looking at your own. And there's a name for what those 6 doors are costing you, and it's not in the code or on any form on your return. It is what I call the default tax. It is what you pay year after year for decisions that you never knew you were making. And that's exactly what we're going to get into today. I am Aubree Denekamp, and this is Spicy Takes and Tax Breaks. I am also known as the write-off queen. You can keep more of what you are earning. So owner A paid $81,000 of default tax last year, and he never felt a thing. Actually, let's stop there for a second, because that's the part everybody does get wrong. Nobody wakes up and writes a $81,000 check to the IRS and thinks, yeah, that sounds great. It feels good. But that's not how it is happening. It happens $50 at a time, $500 at a time, maybe $5,000 at a time, maybe a payroll decision, one entity decision, one retirement contribution you kept putting off because you were busy or thought you needed the cash flow right now, one trip somebody convinced you needed to buy in December. 1 year turns into 2 years, turns into 7 years. And one day you finally sit down with somebody and realize, I've been overpaying that I didn't have to this whole entire time. So that's why I call it the default tax, because nobody really chooses it. You drift into it. It's expensive and it hurts. But I actually think that's one of the biggest differences between businesses that build wealth and businesses that are just staying busy and increasing revenue. The wealthy ones don't make dramatically better decisions. They just make fewer accidental ones along the way. So let's go get this money back for owner A. 2 owners, starting same bill. Everything that moves on this score will be from a decision that they've made throughout the year. Watch. Door 1 is how they paid themselves. Owner Ray had money just land in his account, all of it, taxed on every single dollar for both income tax and self-employment tax. He didn't choose that. He just didn't know otherwise. Whereas owner B set up an S corp and had a real salary, had the rest of the money coming in a different way. So she was receiving the same type of money, but the fork he drove straight past saved her a ton. That's 18 grand with just that one decision. There it is. Door 2 is retirement. Owner A's plan, in 2 words, year after year, was next year. Well, that has been the plan for 9 years running now. Whereas owner B moved a chunk of that profit into her own name before the IRS ever got a piece to tax on it. She didn't spend a dollar to save a dollar. She moved her own money from the gone pile, which is taxes, to the mine later pile. That's 40 grand. And hang on, actually, look at these two first. Neither one here, neither of these doors are even a tax move. She didn't find any sort of loophole. She made two business decisions and the tax just followed her home. Pin that because it's going to matter more than anything else I say tonight, but all of these decisions can do that for you. But before I keep going, the truest thing I know about this work, the most common sentence that I hear even today, isn't a tax question. It's 5 words. Nobody ever told me that. And I hear that constant. Nobody ever told me I could do that. Nobody ever told me that I had that decision to make. Nobody ever told me this had to happen before year end. And honestly, sometimes that frustrates me the most because I think our entire profession has accidentally trained business owners to think accounting is about reporting. It's not though. The report is telling you what happened. Advisory is actually what changes into happening next and also what that liability you're going to be left with is. One writes the history and the other is changing the complete ending for you. That is a huge difference. So door number 3. This is a new one or a new law anyways. You may have seen the headlines or you for sure did. $40,000 deduction. I mean, everyone sees a headline like that. But nobody really saw the part where if you're making over about 500 grand in income, that number quietly shrinks back down. But there is a trapdoor and it's right where a lot of you are standing. So owner A dropped right through it. But owner B had her business pay the state tax instead of paying it herself, which is totally legal and one that most states do offer. But what this does is it walks you right around the trapdoor, and that's legally. Not about politics. The tax code just pays out whoever actually made the decision. And that's the whole pattern. Can we look at that more? Yes. None of these decisions feel important. Nobody calls me exciting because they finally adjusted their shareholder compensation. Nobody's throwing me a party because they opened up a 401k plan. And nobody's posting on Instagram because they made a PTET election. They're just boring. They're invisible. They are paperwork that you're pushing until they aren't. Because one of those boring little decisions become, wow, we can finally hire. We finally can buy that building we've been talking about. Wait, we have cash in the bank? And that's why I love this work. People think I love tax returns, and I promise I don't. But what I do love is watching the tiny decisions become really big impacts in people's lives. Now, door number 4, one of them was paying himself the wrong salary to begin with, way too high, and it was quietly bleeding him. The other adjusted theirs, and they did it with a plan. The same person, same job, one number, and thousands of dollars saved. And here's the part I really want you to sit with. The accountant filed it perfectly. They filed the overpayment perfectly, every form correct, every box was checked, and the overpayment was filed to a T. There wasn't some sort of villain in the room or some fraudster. There really never is here. But that's what makes it so hard to catch. Nothing looks wrong technically, because technically it's not. So door number 5 is the kids. Owner's B, teenager, actually works for the business. So she pays him real wages. That's money that is leaving her pocket in her house anyways. Now it leaves us a deduction into a lower bracket. The kid opens a Roth and has over $1 million saved when he gets older. That's great, but also you're already paying the school tuition. You're paying for those summer camps, the schools, the clothing, the gas for their car, whatever else is entailed. So have them pay for it with what they're paid by you. You're also shifting your income to a different bracket. But owner A's kid, unfortunately in this situation, actually did work too. It just wasn't recorded. So the same pattern, 5th time in a row, one of them saw a decision or was asked to make a decision, and one of them was standing on it and never looked down to see what the impact was going to be. So let's get into door number 6. And I think this is where a lot of you think, oh, finally, owner A finally wins. Last December, he bought a $90,000 truck to save on his taxes. He was excited, bonus depreciated everything, and wrote the whole thing off. He truly thought he was a genius. And this is one of the few moments as the write-off queen that I'm going to be telling you it wasn't, and you don't always need to buy that new vehicle. Because in this scenario, he spent $90,000 to save maybe less than 30 in taxes. He didn't get richer at all because he bought a truck. He got poorer in all reality, and he did it feeling super smart. And that's one of the most dangerous kind of decisions to make, is the one that feels like strategy on the way out the door, where you are actually in a worse position than when you started. Owner B, on the other hand, bought a used mower that she's been needing for a while. It completely changed what she needed to be in for her tax bracket. It was a strategized buy, and she needed it to begin with. Also, she got to keep the rest. She wasn't out all of that cash. So I want you to add it all up. That's $81,000. And look, it didn't vanish. Nobody took it. It walked out through those 6 doors directly to the IRS. But here's why I actually walked you through all 6 today. Every single one of those 6 decisions, they all happened prior to April, before the return, before the accountant even opened up the file or was sent any of the documents, which means the tax return is not what created the bill for them. And honestly, this realization is what changed how I operate my own business too. Because once I really understood that the return is just a receipt for businesses, I stopped asking those tax questions. I started asking different ones. I started asking business questions instead of, how do I save taxes and whittle away my income? We started asking, am I hiring correctly? Am I paying myself correctly? Am I building my wealth? What does that wealth look like to me? What are my long-term goals? Am I making decisions for my future self that we're going to be happy with, or are we just living in the moment of dollar for dollar? And truly, those questions have changed everything in the way we help business owners, because taxes stopped being something that just happened to them. They became a scoreboard. So even though your return doesn't cause your taxes, it's something that is really going to hurt at the end if you're not taking a moment to look at it. So for owner A, the IRS didn't beat him. His defaults did. And let me tell you the part that I most need you to hear, especially if you've been sitting there feeling a little bit sick because maybe you resemble owner A. You didn't overpay because you're stupid or not smart enough. Not because somebody stole it from you either. And that might be the most frustrating part. There isn't a villain. Nobody lied to you. Nobody robbed you. Nobody committed fraud. The money just quietly left through those doors that nobody pointed out to you. That's a much harder problem to spot, but it's also much easier to fix. So let's take a look at this. It's not because of IQ. It's not because of luck. It's not some secret accountant that you can't afford. The owners who keep more just learn to see the patterns that the rest of us just walk by. And the best part here is that once you see them, you really can't unsee them. So today we just ran through 6. I want you this week to go out and do something intentional. Go make one of those on purpose. Just one, eyes fully open and with a goal in mind, because $81,000 didn't vanish. It was standing behind decisions that were never made, or maybe nobody knew were decisions. But you know them now. I'm your host, Aubree Denekamp, and this is Spicy Takes and Tax Breaks. Remember, comment Scoreboard to receive your free scoreboard. I'll send it to you right away, and hit subscribe to follow along. We're going to be going through wealth building next week.